He's been investing in the stock market and using financial strategies and managing funds for a long time. He's in the recent couple of years kind of sent some stuff out in our group and made some bold, I'm not going to say predictions, but the feelings he's had is what was going to happen or why it did happen. And we want to talk a little bit about that today. But I do want to say a disclaimer is that this is not advice and that we do not want you running out and holding us accountable for anything that we discuss today. It's merely an opinion, it's a perspective, and it's a dot. It allows you to form a different perspective on what might happen, and just using somebody's deep experience in probably this is Mike's, I would say, his lane or his major lane. So welcome to the call this morning, Mike.
Thank you, Rock. Thank you for having me. Can you hear me proper?
Yeah, hear you really well. Hear you proper.
Okay, perfect.
So let's dig right into it, Mike. Let's talk about what's happened in the last 4 to 6 weeks in the market and why has it happened?
Well, actually, you know, Rock, what's happened? I mean, to put it simply, you know, we have an exogenous shock. So let's try to put things in perspective here. Obviously, you know, what's been happening with this virus is tragic. You know, many people are dying, too many people are dying. But leaving this aside, you know, there is another huge aspect here is the effect it has on the economy. Because, you know, the solution that the governments have decided to implement is basically to try to kill the virus, but the collateral effect is that they are tanking the economy by having everybody staying home. The thing is that we need to keep things in perspective. You know, the world population is close to 8 billion people. So far, 250,000 people have been infected and just over 10,000 have died. So as tragic as it is, you know, somewhat it's a bit of a drop in the bucket. So but the big problem that we are having here, in 2 words, is that we went into this with an economy that was super leveraged, with a huge amount of debt, both individuals and corporations. And you know, I think, Rock, that you're one of, you know, you teach people that in terms of finances, they should have a rainy day fund, right? That they should have at least 6 months of expenses in a bank account. The problem is most people don't do that. They live from paycheck to paycheck. So if anything happens, they basically bankrupt. Same thing with corporations. You know, they don't, you know, like if you look at the airlines, for example, they spend billions of dollars buying back shares and doing stupid things. And then the day that the problem arrives, they have no money, they go bankrupt. This is the huge problem that we are having, and this has real ripple effects on the economy.
Now, let me just jump in here for a second. Warren Buffett, I believe, was sitting on, before this happened, $134 billion of cash. Does he know something we don't know?
Well, yes. I mean, 2 things. First of all, obviously he never expected this would happen. However, he was smart enough at some point, you know, he thought it's difficult to find any businesses or any stocks to buy for cheap. So he refrained from doing that. That's why he has all this cash. Now, if I can add another point, Rock, which is important, is that you can easily make the argument, you know, we had an 11-year bull market. The market should have gone down at some point, right? What is incredible is the speed at which it has happened, which is unprecedented. So we're kind of already overshooting to the downside. But the problem is that most people who are in the market, who are investing, buying stocks, they actually have no clue what they are doing. So, you know, ask people, you know, they don't know how to value stocks. So next time somebody tells you about stock X at this price, you know, ask them, what do you think the value of the stock is, and look at their face. So probably they can't answer. And so, so because of that, people panic. So when they see the market or their stocks going down, because they don't have no idea what the value is, then they just, selling, they panic and they sell.
Right.
And which is the wrong thing to do. You should have had cash going into this, obviously, you even the best investors cannot time the market. Nobody could forecast this. So like everybody, I took some big losses. Yet, I had some cash on the sidelines because when this story started, I suspected it could possibly have some, devastating effects. So, most people, because sadly they do not educate themselves, they invest in mutual funds, which generally when the market goes up, it's okay to do that. But the problem with mutual funds is that I just heard they are only 5% liquid. So basically, when the market goes up, they're gonna make the money back if they're in the right stocks. But the problem is they don't have any cash on the sidelines to take advantage of the incredible bargains that are already there.
Yeah, totally. A lot of them they invest in real estate and different things like that, so they're not that liquid. I agree with you. So what I hear you saying is that we were due for a correction, and this has just helped us, accelerate it. And obviously, with cruise liners and airlines dramatically being impacted in hotels, those stocks have crashed down. Do you think that those stocks are going to be bailed out by those companies going to be bailed out by the government, or do you think that Warren Buffett's going to swoop in and do some deal and start, own half of Carnival Cruise Lines? What do you think is going to happen there?
Well, Rock, let me, I'm going to obviously respond to that question, but maybe continuing on what I was saying 2 minutes ago, my objective here is that, the attendees, the listener, by the end of this conversation, that they end up knowing more about the stock market than 95% of the population.
Okay,
you
go.
That sounds like a tall order, but actually it's not that hard, actually.
Okay.
So the most important to understand, coming back to this, is how to value a stock. So what is a stock? So I'm trying to keep things very basic and simple here. So Rock, if I would ask you what is a stock, I mean, there are two, you would be surprised that most people can answer this, but there are two simple questions that are useful to this question. And probably the first one, it's the easy one, is basically you buy a piece of ownership into a company and into a business. So it's not the casino, right? It's not a slot machine like a lot of people treat it. So that's number one. So number two is, I'm going to come back to this, is that you are buying a claim on the future cash flows of the company, basically. So that's the definition that you use to value it. But coming back to the ownership, let's take an example that everybody knows, because they probably are client of the company, they must just, like Expedia. Now, a month ago, so shares of Expedia were at $122. So the company was worth $17 billion. So Rock, let's assume you're the lucky owner of Expedia. And so 1 month ago, your business was worth $17 billion. Now we have this temporary crisis. Obviously, you have a huge problem. Your turnover is dropping as a rock, so to speak. And I'm coming to you, and I'm telling you, Rock, listen, I love to buy your Expedia, your business, and I'm going to pay you $7 billion. What would you do? Well, if you're not desperate and you know your business is going to go back up right after this, you can say, are you totally out of your mind? I'm never going to do that, of course. My business is worth 17 billion. There's no way I sell it to $7 billion. Yet today, people are selling Expedia shares for $48. Isn't that insane? Now, to illustrate this situation, let's assume now that I do the same proposition to you, but you're two scenarios. You're desperate for cash. So you know that your company is worth 17 billion, but you have no money and you basically can't buy food. So then you're probably going to take my check, right?
Yeah.
So to illustrate the need for the rainy day fund, or case number two, you have inherited the company and you have no idea what it's worth. And I come to you with a $7 billion check. Well, you don't know, maybe you think it's a good deal. So then you might accept it as well, right?
Correct.
So now to get, if you get, so the question is how to value a stock. So it's actually, not that complicated. It's like any business. It's like you, it's a multiple of basically, sorry, let me get back to this. So remember my definition. So if I own a stock, I have a legal right to the cash flows the company is going to produce in the future, okay? So basically, what is the value of a stock? What is the value of Expedia for? It is the total of all the profits they're gonna make as long as they live. Now, nobody knows, obviously nobody knows what that amount is, and we can't see that far in the future. So what do we do? Generally, like for example, a month ago, the people were valuing stocks on average, you pay like 15 to 20 times the current earnings or the earnings of next year as an approximation, okay? So now let's take this example. So let me ask you this question too. So let's say the value of Expedia today is 20 times its earnings in a normal situation. So let's assume the virus is around us for a year.
Okay.
And for a year, nobody does anything, right?
Yeah.
So which for most people would seem like a bit very conservative, like an exaggeration. So let's say for a year, Expedia doesn't make any money or even loses money. So you have 20 years of profit, you have to forego 1 year. So okay. Let's say you even make a loss that's equivalent to a year's profit. So let's say you lose 2 years, worst case. So out of 20 years of valuation, you only have 18 now. Well, 18 out of 20, you still have 90% of the value. So does this justify Expedia losing 70% of its value? It makes no sense, does it? So that's, so, and finally, so that I don't do a monologue of this, but before I get back to you, to answer your questions, no, about bailouts and I'm going to take your example of cruises in a second, but let's taking bailouts. Let's talk about Boeing for a second. As an example, Boeing is one of the most iconic companies in America and the world. It's a fantastic business. Why? Because it's a duopoly. You only have Boeing and Airbus. They have military contracts on top, so they have a business cut for themselves for the future, and there is a secular trend of travel increasing, right? Yeah. So Boeing shares were 1 year ago were $440. Now we know they had issues, but today you can buy them for $95. This is totally crazy. However, why is that? Because Boeing is actually de facto bankrupt, sadly. And the only way they won't file for Chapter 11 if they're rescued by the government, which the government will undoubtedly do. Now the question is, how will they get rescued? if they do the same as they did with General Motors during the crisis, you as a shareholder, you will be wiped out and you basically lose all of your money. Now, if they don't do it that way and Boeing survives, chances are you can buy today for $95 something that will go back to $500 and $1,000 in a few years. So this is a very difficult one. So for this one, you probably need to wait. Either you gamble or you wait to see what's happening. Now, if you go to the cruises, then, well, it seems they're gonna be helped. Again, we don't know how, but let's assume they're not gonna be helped because it is not an indispensable business, right? Somewhat. So then, I mean, the bargains there is totally crazy. So if you look at Carnival, for example, there are three: Carnival, Royal Caribbean, and Norwegian. Now, if you follow all that I said, you would be tempted to buy those shares. There is one thing, however, you have to be careful, is that these companies could go under if they have a high level of debt that they can't service. So that's what you need to do, and that's what I do, and for myself and for other people, is I will go look at the financial statements, I will do all the work, and I will find what is the odds they will survive? Because if they don't, you can lose it all. So yeah. Does that answer your question?
Yeah, it does. And I'm looking at these charts as you're speaking to me, and I'm watching Boeing went down from 300 plus down to 95 or whatever in about 3 weeks.
Yeah, I know.
Like, did somebody who shorted that stock became very, very wealthy? No?
Correct. But you know, shorting is I wouldn't advise shorting for the novice. I don't mean myself. The problem with you could short. If you short Boeing and it goes to zero, you will make a huge amount of money. Now, if you short and tomorrow the government announces they bail Boeing out and they don't wipe out the equity, then you will have a huge loss, of course.
Yeah, no, I'm just talking about if somebody was wise to the fact that this trend was happening in the last few weeks, there was a lot of money that potentially was made by some people.
Yes, the way you would have known that, Rob, because nobody has a crystal ball.
No.
But the way that you would have done that is when Boeing started to drop and you wonder what is going on here, and you would go and look at their financials, follow what's happening, and then you realize, oh my God, they have so much debt. The airlines who are having huge trouble are not going to postpone all the orders, or most of them. They have the problem with the 737 MAX, so you could figure out they're in huge trouble. Yeah. So yeah, you could have shorted them that way.
So I got a couple of questions that have popped up here. I'm going to throw them at you. One of them is from Harry. He says, aren't they also pricing in the risk of failure, which is higher due to over leveraging?
Correct. So that's what I was saying. So the problem is the following. Probably most stocks, once this is over, most stocks should go back, right? Because some were overpriced. The problem is some were overpriced. They're never going to go back up because of that. But the problem is potentially a lot of them will go bankrupt. So you cannot buy the same. That's what I'm doing. So for example, what I'm doing right now, which is probably why I look very tired, because I went literally through all the S&P 500. I'd look at every single company, and then what I do is that I look at the ones that drop the most, because those are the ones that either go to zero or would go back up huge. And then I look at what I have to go and dive into them and look at, okay, which one will survive. And so out of the ones that drop the most, I look for the real quality ones, because people who don't know what they're doing, because they threw the baby with the bathwater, right? So you have to go for you have to find the babies.
So if we look at taking Boeing out of there and the cruise liners, because they have such huge physical expenses with the planes and the ships, Expedia, on the other hand, is more of a service provider, and they probably had a ton of staff and some software and computers. rented office space, but they should bounce back and be more resilient in theory than the Boeing and the cruise line. Does that make sense?
It does, but most people don't think like that, which they should, but it does, yes.
So are you looking at Expedia? Is that something that you think is got a good possibility to come back?
For sure. No, I wasn't I wasn't necessarily planning to give any stop. Either, like you say, you have to.
No, I'm just asking you, between you and me. Like, yeah. I look at that. I use Expedia all the time.
I know.
And I'm like, if it's gone down that much, it's going to be on my radar now. I'm going to watch its behavior.
Correct. Yes.
As soon as, here's the thing that I think, as soon as the government goes, okay, things have settled, the amount of cases have reduced, we are allowed to now let people out, that happens in 2 weeks or it happens in 2 months, you know, flights are coming back. There's, at some point in time, there's going to be a surge. There has to be, right? Because it's future earnings that you're owning a share for. Correct.
So Rock, you have to, you know, the best way, that's what Warren Buffett does. You were talking about it. The best way to buy stocks is when you don't want to buy them.
Right.
It's just gut wrenching. They're dropping like a stone.
Yeah.
And that's when you have to. So what do most people do today? Which I think is totally, they do exactly, I think, the opposite what they should do. So what do they buy? Costco, Walmart, things like that, Zoom. I'm coming to back into that in a second. So let's say Costco or Walmart. So what they think, people need groceries, but it's exactly the opposite. People buy loads of toilet paper today, but once this is going to stop, once once the epidemic stops.
Yeah, they won't buy for 6 months now because they'll have it.
Exactly. So you should think long term if you're an investor. So it is an artificial bump. This is not sustainable. So long term, Walmart is not any better than they were before. So now let's take another example, Zoom. So Zoom is a fantastic business. They're doing very well. We're using it at this right time. But Zoom already went up 70% over the last few weeks. It's, I haven't checked actually, but it sells for thousands of times earnings. All the good news is already in. So let's assume Google comes with something else that will compete. They will never make that money. So you know, that's extremely risky.
Right.
So instead of that, you should look at the great businesses that are for sale and should never have been for that reason. And it could be business that you know. And people keep buying the same thing. They will still look at the first, trying to buy Apple, Tesla, etc. You know, no, I'm sure Apple is a great investment, but it's not a bargain by far. Like it's probably, so it's still overvalued by, but you know, but yeah, so you need to know what you own. People buy stocks, they don't know what the company does. They look, some people, they just look at charts and they, you know, that's not the way to invest. That's gambling, you know?
All right, so we got a couple of minutes left. So what can people do going forward to make sure that they don't get crushed or that they can maybe be in a position to get some of the bump that's due to come back? Okay,
so for what what a good idea is to do let's say to do an audit of what you own. So you go through your portfolio and you look at every stock that you own and you ask yourself what's the worst case scenario? Will these companies survive? So do they make any? So you can easily you check. Do they make any profit? What is the multiple of the profit that the stock is at the moment? You can check that on Yahoo Finance. That's very easy. I mean, anybody that needs, you know, anybody that needs some, wants to know how to do that or have questions, they're always welcome to contact me, of course. But this is the essence. So you go, you look at what you own, and basically, then you look at great quality businesses that are for sale, and you do the same exercise. So what are they making money? How much? Try to see how they are impacted, and you say, so should I buy them at this price? And basically what I'm going to do this weekend actually is I'm going to switch. I mean, I have now a lot of cash because I sold a lot of stuff, but thankfully, but for the rest, I'm going to completely remodel my portfolio, and I will move towards quality, because today you can buy quality for the long term at very cheap prices.
Do you think it's too early to start buying?
Okay. Nobody knows.
I know.
No, that's the
problem.
problem.
But I got to ask you the tough questions.
No. But this is the answer. Nobody has a crystal ball. If I watch CNBC all day long, and you have all these specialists making predictions that they have no clue. But okay, two things. First of all, we already dropped 30-35%. This is huge. So in a recession, you drop between 30 and 50. So some way, I mean, it can drop to zero, but be careful what you own. Some stocks can go to zero or very little, but I'm talking average now. But otherwise, I don't invest in the market. I invest in companies. I invest in individual stocks. So once you know, or you have an idea, the value of a stock, then let's suppose I think the value of Apple is $200. I don't need to ask myself every 5 minutes, is this the time to buy? Is it the time to sell? It's very simple. It's worth 200. What is the price today? It's 250. No, I don't need to buy it necessarily today. If it drops to 150, I say, well, I don't care if it goes back down to 100. If I buy it for the long term at 150, I'm going to sit pretty. Don't try to be a hero. Nobody can catch the bottom. Some people will, because they're going to be lucky. But the thing is, unless we don't get this virus under control, it's going to go back up. There's no reason. But make sure you own quality, and you know that you own, because some stocks are never going to go up. There was some frost. People will not throw money after bad the same way they used to do before, possibly. So all the Teslas and Virgin Galactic, of course, they're not affected because they've never made any money, and they won't for years. But you know what I mean? It's
yeah. So I got a good question here for you from Brad Moore. What are your thoughts when the unemployment numbers come out this week and the impact on the market?
Okay, they're going to be absolutely horrible, but everybody knows that, and that's why the stock market dropped 30%. The stock market is
it's already built into it.
Yeah, this is one of the most important things that you have to understand, and that I tell my coaching clients, is that the stock market is a discounting mechanism. So the stock market was anticipating these figures.
Right.
That's why it dropped like a rock so quickly, because it's hard to make. But when things go, the stock market is going to start going up well before things improve. Right. Right. So that's the problem. That's why you never catch the bottom.
Right.
Because
what do you think about Amazon that's hiring another 100,000 people? Their stock seems to be holding up pretty well.
Yes. Well, there are two ways. There are two ways to look at it. Amazon is a fantastic business. Okay. So no doubt. So there's no reason. So if over the long term you should make money. No, but I won't buy Amazon today personally. I'll tell you why. Because Amazon has hardly dropped. So Amazon is always going to be there. So what I rather do is that I buy the ones that were brought down for the wrong reasons. I write them up, and when I have wrote them up, and when the cruises are back up to wherever they were, then I get out of the cruise, and that will be the time to buy Amazon.
You're a value investor.
Sorry?
You would be called a value investor, yes?
Yes, yeah. I'm a bit of a hybrid, but no, because I would still buy Amazon, even though no value investor would buy Amazon. But I would buy the high growth companies, but if they have a viable business, like, Amazon, by all means, Amazon, Google, the classics.
Yeah.
Apple, even if you buy Apple today, I think Apple is overvalued, but over the long term, you should do fine,
Right. All right, we got closing time for closing comments. We can talk all day with you, Michael. Thank you so much. And I know we just touched the top of it, but hopefully we gave some value to people out there. Your 30 seconds for your closing comments.
Yeah. So so please don't panic. It's too late to panic. Panic is not a strategy. So take advantage of the opportunities, and you know, I don't know, Rock, if you give your people's details, but I mean, people who know me, anybody is welcome to, if they want to have a chat, just reach out to me, and I'm happy to help wherever I can.
Somebody put your contact information in the chat box, Mike, so people can reach out to you. And of course, we'll continue to have your presence in M1, and we thank you always for your generosity and your wisdom. And thank you so much, and stay safe and healthy. Namaste.
Thank you for having me, likewise, and this too shall pass.
Yes. Fantastic.
Thank you, Rock.
Thank you so much.
Bye.